Decentralized finance summer is coming, also known as DeFi summer. And these are gems that you're gonna most likely wanna have in your arsenal during this time period. So with that being said, let's just dive right into it and get to the good stuff. My name is Dan from the Hidden Gem Network, and it's a pleasure to create another incredible video for you outlining what I believe is an incredible sector, one of the fastest growing in the crypto space, and it's only going to get bigger, and I'll explain why. But before I do so, make sure you subscribe with notifications, please, and smack the like button if you want more videos like this going really in depth into the DeFi world. Now, the other thing is, if you haven't seen this yet, I believe it's one of the best videos I've created, is an outline of how I sold my possessions such as my Lamborghini and my watch collections to dive headfirst right into crypto. And the reason I did that was because of the fact that I have a long-term vision to really help and support my parents and my grandparents, or my grandma specifically. And really just, again, if you want to watch that, it's tagged up there. I do believe that it's a fantastic video. Now, one thing, quick update, is that every single week for the next 4 weeks, I'm going to be releasing videos on Tuesdays and Thursdays at 1 p.m. Eastern time, just for the next 4 weeks. And then I'm going to go ahead and resume, ideally, my daily uploads again. I have projects and obviously work that I need to go ahead and accomplish, but I wanted to keep you guys in the loop of the upcoming schedule that you can be aware of. So, DeFi, what is decentralized finance in the crypto space? Well, essentially, decentralized finance is exactly as it says, is the finance world in crypto, where you can go ahead and lend money, borrow money, earn interest on your lended money as well. There's so many different things in the DeFi space that you can go ahead and be a part of, and that produces some incredible cash yields or crypto yields that you can eventually turn into fiat if you so wish. Now we're gonna dive into that. But first, I really want to explain to you how big the DeFi market and the DeFi space is. So this right here is DeFi Pulse. Now, DeFi Pulse, you can see, has all the statistics, roughly all the statistics, inside of the decentralized finance space. So the total value locked in US dollars across many different platforms such as Aave, Polygon, Uniswap, Yearn, SushiSwap, again, a lot of liquidity providers, you'll see that there's roughly 57.13 billion US dollars locked in actual liquidity through all of these platforms. And all of these platforms do something completely different. However, they're all powered by something I'm going to cover in just a few moments, known as oracles. And for those of you that are fans of the channel, you know that I love oracles and I love the DeFi space. So with that being said, we can see in just the last 90 days alone the growth. And of course, we went bearish. Now, what happens when Bitcoin and the crypto space goes from bull to bear? Well, you can see this massive drop off that happened right here, right? Why does this massive drop off happen? Is because people pull out their money, their interest, their capital that they have locked inside of these liquidity pools and a bunch of other DeFi projects and protocols. They withdraw their money. So again, it lowers the TVL, the total value locked, and they use that capital to buy during the dips and buy during the bear market. So of course we see these dips, and it's okay. Like, it is fantastic to see this, because that also reflects on the fact that individuals, investors, are removing their money and they're purchasing during the dips with the money that they had locked where they were earning interest on, which again, like I said, is a very good sign where people are still purchasing. And you're gonna notice that over time, again, it goes ahead and obviously the chart just slowly climbs back up as Bitcoin in the crypto space goes more bullish. So if we go 1 year, all right, you can see these dips that happen like right over here, right over here, right over here. And so if I just go all, you can see the slow growth as obviously it's hard to see this particular chart because it's extremely zoomed out, but these dips are extremely natural. Now, obviously we have a dip right over here. Let me just go back to the 1 year outlook. We have a pretty steep dip, and again, same thing, it's following Bitcoin, it's following the crypto space. And the reason is, like I said, people are pulling out their capital to buy these dips. It'll go ahead and recover. It's just a correction. It's totally fine. As a matter of fact, this is super healthy. Just keep that in mind. So when you're looking at the chart and you're like, oh goodness, people are leaving the DeFi space, they're not leaving the DeFi space. They're just using their money to go ahead and purchase, to purchase and invest in other projects and cryptocurrencies that they believe is on sale right now. Now, again, we can see right over here, we have lending, we have decentralized exchanges, we have derivatives, we have payments, we have assets. There's so many different sectors in here. So lending is like Aave and Maker, then decentralized exchanges, Uniswap, Pancake Swap, Sushi Swap. What else do we have here? Again, those are the three main ones. As you can tell, the locked value in here is in the billions of dollars. Banker, Balancer as well as another big one. But again, I would say these top three, Uniswap, Curve, Sushi, are absolutely the three biggest ones when it comes to decentralized exchanges, more than anything, providing liquidity to decentralized exchanges, excuse me. So derivatives, again, if you know DYDX is actually one of my favorite particular platforms. Think of futures trading, right? So DYDX is essentially a perpetual contracts platform, and there needs liquidity provided into that particular platform, and that's where something like Yearn Finance comes into play. And Yearn Finance, if you just take a look right, where is this? Payments. I'm trying to see, there we go. Under assets, Yearn Finance actually provides liquidity to a platform, to derivatives platforms like DYDX as an example. So their locked value is 177 million. That's all right. But again, derivatives, I don't really play in the derivatives field. I do go ahead and like decentralized exchanges, such as providing liquidity and creating a liquidity contract for certain token pairs. I do love that, so that's under decentralized exchanges. I don't necessarily play in the lending field. However, I indirectly play in the lending field by going ahead and using platforms such as Yearn. So Yearn is by far the biggest yield optimizer. And I'll dive into what a yield optimizer is and how all of this works. But essentially what Yearn does is, me as an investor, let's say I have $1 million USDC. So essentially I want to go ahead and earn interest on my $1 million. I have two options. Number one, put it into a savings account and earn 1% a year if it's fiat money in a bank. 1% or less. You can get, some percentages. It might be a little riskier, not FDIC insured. Again, there's so many different speculative things that you can do with higher gains on your money in savings accounts. However, if you go and use that same million, convert it into USDC, you're able to go ahead and use something like Yearn, and what they do is they're an optimizer that goes and looks for the best yields on your money. And that's the thing with Yearn and why they're the biggest and the best, is because the tokens are distributed in a way where there's no one massive holder, meaning the creator, and I'm not going to go on the owner of this, but he's exceptionally well known and respected in the DeFi world. He doesn't own any of the tokens, and it's all governance based by the actual token owners on what happens with the particular platform. So again, there's a lot of governance that comes into play, and I won't get too deep into Yearn, but these particular pools, let's just say I put in my $1 million, what I can expect is anywhere from like 10 to 14% annually on my million, or whatever I decide to deposit. So if I deposit $1 million and the annual APY, so the annual percentage yield, so the APY could be like 14%, it could be 10%, it could be 9%, whatever it is. Yearn finds the best sources. Like if they go ahead and see that DYDX is paying an incredible yield for lending money, then what Yearn does is they allocate all the funds that are locked in the USDC pool, and they'll go ahead and be like, okay, you can borrow this, and it happens through a smart contract. So you're always getting the best APY, and that's why Yearn is the biggest. And if you look at the actual underlying token cost, it's actually more expensive than Bitcoin as of right now. As of right now, I'm just flashing back to the charts as I was looking at them a few hours ago. So Yearn, in my opinion, will have a token value of anywhere from like 100,000 to 200,000 because they have a circulating supply of 36,666 with a unimaginable amount of demand. So Yearn is massive. I'm not going to speak too much on Yearn. We have Badger. So again, providing your assets, typically stable assets, DAI, USDC, USDT. And again, this isn't necessarily stable, but you can provide these assets such as Uniswap, Uniswap tokens, and Sushi Swap, You could provide, these tokens, these assets, and majority of it on Yearn is mainly stable coins that are wrapped. But again, that's a little bit more elaborate and something I don't want to dive into in this video. Long story short, you got $1 million as an example. You want to earn incredible percentages that you won't find in a bank. Yearn and other yield optimizers is where you want to go. Yearn being one of the biggest, one of the best, one of the most trusted as well. And again, it's community ran through their governance, depending on the allocation you have with tokens, so you can vote. So just keep in mind, the DeFi space, there's so many things that happen in the DeFi world. But now let's break this all down, right? Now, why do I have Chainlink open? What does this have to do with anything? Well, I always mention this over and over again. Chainlink is an oracle. And what an oracle does is it takes data from, it can be data from the offline world and brings it to the blockchain and goes ahead and processes that data and spits it back out. And this is where APYs and lending percentages, borrowing percentages are calculated. So an oracle is needed to do that. So an oracle also can go ahead and randomize numbers for gambling websites. An oracle basically does anything with processing data, period, onto the blockchain, okay, for any type of protocol. And that's why Chainlink is massive, and we've seen incredible growth of Chainlink. Obviously, it's at 24 now. I'm holding since, dollar cost averaging my way from 40, 30, 25, etc. Because I know Chainlink is going to go to, if I had to guess, the next leg up that we see, Chainlink is going to go around $75 to $100. Now why? Is because of the fact of how many protocols are built using Chainlink and the simple fact that DeFi, once the DeFi sector blows up even more, it's going to need more oracles. Now, again, depending on the blockchain that it's built on, if you're using, let's just say Cardano launches, you have other particular oracles that are being built right now, like Ergo and Charlie 3, that can particularly overtake Chainlink. However, that's if they go cross-chain. Chainlink can build, their oracle can be used to build many different protocols on, let's just say, Ethereum. It can go ahead and be used on many different networks, many different blockchains. And if you go and take a look at Chainlink right over here, they say Chainlink's decentralized oracle network provides reliable, tamper-proof inputs and outputs for complex smart contracts on any blockchain. It works for any blockchain. Now, I also want you to just take a look at the chart and just show you something so you can grasp how insane this is. A year ago today, as a matter of fact, I don't even want to say a year ago today. I want to just put a year ago, maybe 2 months back. So let's just say 14 months ago. So 14 months ago, I'm just going to go ahead and grab around, I don't even know what today is anymore. Let's just go 2020. And we can see that Chainlink around April, I mean, we're not even in April right now. Let's just go, let's just go around January, March, April, May. So we're in May. So May, around the same time, Chainlink's worth $3.83, or excuse me, $3 to $5. Let's just put that range on it, okay? So what happens a year later? Let's fast forward to a year later during this particular bull run. We saw $51. $51. Now, why? Why did we see exponential growth? Obviously, and I want to call a spade, we have the dip. We have a dip that's happening right now, but that's because of the fact that everything follows Bitcoin and everything is currently dipping. All altcoins are suffering and bleeding because of what's happening to Bitcoin, naturally. So we can see that, relatively in the past month or so, we hit the 51.85 and now we're at 20-something dollars. So the reason why Chainlink is so important and why I'm mentioning it in this video is because majority of the DeFi projects need something like Chainlink, and everything that is built in the DeFi space needs an oracle to gather data. And that data is what determines how much money you get paid and how much money you actually earn from your investment or stake on what you're trying to accomplish. So I want that to be very clear. And Band as well. Band is also like Chainlink. They are they're a decentralized oracle. Brand's a cross-chain data oracle platform that aggregates and connects real-world data and APIs to smart contract. They do exactly what Chainlink does. However, in my opinion, they're not as big as Chainlink, so you got to understand that that's factored into this. But you can just see that that with Band, you know, it's, in my opinion, it is, because it's not as widely used as Chainlink. You got to understand that. You know, the price factoring here is very interesting. We see a lot of movements. We see a lot of, you know, massive movements to the upside. You know, during certain times, such as, you know, a massive bull run like the one we just experienced. Now, I believe that projects like Band and Chainlink are currently on sale at $674. It's a really good, you know, price to pick it up, because over time more projects will go ahead and use, you know, oracles like Band. It's not a one size fits all, meaning that we have seen that it's not one crypto will win them all. So we have Ethereum versus Bitcoin, right? And we have Chainlink versus Band protocol. It's not like the simple fact that everything in the DeFi space will ever be built on Chainlink and Chainlink only, and they're the only ones viable. No, there will be market share that is allocated towards Band and projects that are built using Band for simple reasons that they might fill in holes that Chainlink doesn't. So again, these are two that I suggest, Chainlink and Band. They're very, very discounted at this time. However, let's talk about yield optimizers, because yield optimizers and yield farms are very powerful if you know what you're doing and you know how to move your money around. But if you don't know how to move your money around, then using something like Yearn is going to catch your attention. So let's actually talk about something like Beefy. Now, Beefy Finance, $832 is so discounted. Now, Beefy is also built on the Binance Smart Chain, just so you know. However, you can see that we have Polygon, we have Avalanche, so they are cross-chain. Beefy is a cross-chain yield optimizer. Very important you understand that, is that they work cross-chain. However, you're like, oh, $832, that's really expensive. Well, if we look at the total supply, there's only 80,000 total supply of Beefy. Now, why is this important? It's because obviously it's simple supply and demand rules. Now, let's also talk about the simple fact that Beefy, if we just take a look at the chart, we can see in the past year, literally in just a year, if we take a look in October 2020, they were at $12. This particular year, they hit close to $3,000. Now, there's a lot. This is extremely volatile. However, in my opinion, Beefy, just like Yearn, is only going to keep increasing their TVL. So the more TVL they have, the more valuable they become, basically, because more users are using them and they're able to go ahead and keep on building pools. So if we take a look at Beefy, you'll be able to see right over here, if you just solely stake Beefy in the Beefy pool, you can go ahead and have a 12% APY. Again, this is very interesting because the fact of Beefy being worth what it's worth, there's a lot that goes into it, such as governance, and the fact that how many people are actually staking their Beefy. So it drives the price up with less in circulation, so Beefy becomes a lot more valuable, right? And so you can just see they have a lot of different pools, but what's really important that you understand is you can select your chain, and if you just take a look at uses, excuse me, you can see what Oracle essentially they're using, or what platform's Oracle they're using, because PancakeSwap has their own Oracle to go ahead and determine their APYs and whatnot. So if you take a look at Pancake, this is PancakeSwap, JetSwap, Doppel, Pancake. So what they do is they go to somewhere, let me grab Pancake right here. So they'll go to a platform like Pancake, they'll see this token Calm, K-A-L-M, and BNB liquidity pool. So you can go ahead and get Calm tokens, and then you can provide a one-to-one and create a liquidity contract. And if you create that liquidity contract and then stake in this pool, you'll have daily of 0.94% or 3% APY. So you can see Wings is on JetSwap. This provides incredible 3.32%. There's $500,000 worth of Wings inside of this pool. And if we just keep on scrolling down, they have so many different pools. This is why Beefy is interesting and very powerful, is because their amount of pools that they offer is extensive, is very extensive, and cross-chain as well. So you can see a lot of the liquidity is provided to PancakeSwap, and then they had Venus as well. Venus was, I'm not going to dive into Venus too much, but essentially it's for stable coins, and it's for other, particular tokens as well, but Venus is mainly for the stable coins that they used. But you can just see a lot of different decentralized exchanges where they're providing, what Beefy's doing is they're essentially getting people to provide liquidity to those exchanges in return for the actual percentages that they gain. Now, where exactly do these percentages come from? This is such a good question. People are like, well, how does this 0.44% get generated over here? How are these calculated? Well, it's simply put that I already talked about in Oracle, but when you actually transact on something like PancakeSwap or Uniswap, you see the liquidity provider fee and it tells you what the fee is. Well, those fees add up and get sent to this pool, and then depending on your allocation in the pool, those particular fees get distributed to you as rewards, and then you can go ahead and let them auto compound, or you can harvest those rewards. So a platform like Beefy and Yearn, they essentially get paid when you deposit, withdraw, or your actual earnings, if not all of them, depending on the platform you're using. So that's Beefy, and we also have Yearn, which I keep talking about. As you can see, the 69th ranked in market cap. It's massive. There's 36,666 in supply. And if we just take a look at the max chart, we can see that it topped out around 82,000. But like I said, you're going to mark my words on this. You're going to see Yearn go to anywhere from $100,000 to $200,000 in the upcoming months, if not year. So Yearn is so powerful. Let me show you one of their particular USDC pools and how much money is locked in to their USDC pools. So if we just take a look, where's USDC right over here? They have $317 million locked into their USDC pool, paying roughly 13.72% annually, and this number fluctuates. But the lowest I've seen it is like 9%, the highest I've seen it is like 14-15%, which is great, especially if you're an investor with 10 million, maybe $1 million, whatever it is, even $1,000, you get 140 bucks for leaving $1,000 in there. The more the merrier. So that's why individuals like to use platforms like Yearn. It's very powerful, and it makes you a lot of passive income. Next, we have Pancake Bunny, and these are a lot more speculative. I want to make sure you understand this. This is highly speculative, and these produce interesting, and they're super volatile. These produce interesting APYs, but they're also liquidity optimizers, essentially, farm optimizers. So Pancake Bunny just underwent an attack, a flash loan attack, but they were trading at like 200, 300, 400, and then out of nowhere, they hit a flash loan attack, inflating the market with 8 million extra tokens, and now they're trading in the 20s. It's funny because the moment I saw that they got hit with this, I was 30 minutes in and I bought in at 10, and I was able to sell around here, the $40 ranges. So I made 4x on my money within literally 24, 36 hours, whatever it is. And this just happened to BurgerSwap as well. And the reason why this happens is because of the simple fact that there are holes in the system. However, I'm not going to go too deep into this. I suggest watching my Pancake Bunny video that I created to really dive into this. They are going ahead and basically giving back, and they created a very specific, and you'll see it right over here, they created a very specific pool. It's called the compensation pool. The total compensated paid is already $6 million. So again, they have a total of $1 billion locked in totality, and they are the biggest on PancakeSwap. And by the way, they were backed by Binance Labs and a few other investment firms. And Swampy's very speculative. This is one that a lot of people haven't heard about. And they have total lock value of like 60 million. Yeah, so right over here, 60 million. They have a CertiK audit, which is great. And they have incredible yield percentage staking their native token. But again, you can go ahead and see the amount of pools they have and what decentralized exchange you're going to be providing the liquidity for. So there's a lot that goes into these two speculative plays that I don't necessarily want to talk about, just because of the fact that they are speculative and they're not for everybody. And I don't suggest putting in any investment to speculative plays. And just so you know, Swampy, it hit a price point of I think $180, and I sold So yeah, so I sold around the top. I got in around 100 and then I sold around 180, and then it just, let's just realize what it did here. So again, highly speculative right over here. All right, so lastly, what I want to touch on is Ergo and Charlie 3 for Cardano. Now, these are going to be oracles that are going to be used for the Cardano decentralized finance marketplaces, essentially. Now, why am I mentioning this is because of the fact that these are gems as of right now. Now, again, I want to make this very clear. There's a lot of FUD and a lot of negativity around Charlie 3. A lot of people are saying it's a scam, and there's so many signs pointing to it's a scam on Reddit. I still believe that there's hope in this particular project. I don't necessarily think Charlie 3 is a particular scam. The team is doxxed, right? And I get it. There's a lot of Ergo fans out there, and I love Ergo, but I also love Charlie 3. And like I said before with Chainlink versus Band Protocol, is that there's not one that's going to rule all. There's going to be a distribution, a market share of other projects like Charlie, like Ergo, that go ahead and other protocols build on and use as their oracle. So I don't ever want anybody to think that one of them is going to rule all. And these are both for Cardano. Now, again, I've invested in Ergo. I've also invested very heavily into C3. And if you notice, with the FUD has come a lot of price, decrease, if you will. So it was around 377, recently. Now it's at 132. I definitely think as Bitcoin pushes down, a lot of these are going to go even lower. Altcoins are going to be hammered. They're going to really take a hit. So with that being said, you can get these at highly discounted prices and dollar cost average your way in. So these are some of the particular tokens. These are some of the particular projects that I really believe in, that I think have a lot of upside potential. And if you want to go ahead and invest in them, please do more research. I'm not a financial advisor. With that said, my name is Dan from the Hidden Gem Network. I hope you learned a lot in this video. Please stay safe during these times. And also, please, if you can, subscribe with notifications on if you like this video and you want more like this. So again, with that being said, thank you so much for watching. I thoroughly want to go ahead and thank you because it means a lot. And smash the like button, and I'll catch you soon. See you guys.